This week video will cover the gold market for the week of February 19, 2024. If you like this video, don't forget to click on the like button, subscribe to make sure you don't miss any future videos. Before we start, make sure you read carefully the disclaimer. To analyze the gold market, I use the GLD ETF. On the long term we have a $200 target not met yet. Here a chart, showing the correlation between the GLD ETF and the gold prices. The reason I use this ETF is because there is a very good correlation with the gold price. Is 10 times cheaper, less risky, and we can trade using options on the Chicago Board Exchange. On my last gold weekly update, I was expected the low forming soon. Let's examine the 20-week cycle. Last week the gold ETF crossed below his cycle line at 187.47 for a potential target at 181.76 or $5.71 or 3%. This crossing is an important one because it's happened 1 week before the expected 20 weeks low forming on the 3rd week of February. It's been 19 weeks since the last 20 week cycle low. According to Hurst cycle nominal model, the 20-week cycle average length is 19.5 weeks. So we can expect the 20 weeks forming this week, with a possibility of the low, has formed last week, on Wednesday, February 14th. The success rate for this cycle is 100%, meaning when trading this cycle, all the trades was profitable. What's next? Technically the gold ETF should form a low this week. Then rebound and start a new 20-week cycle. During his rebound, the gold ETF should cross above his cycle line, confirming the 20 weeks low. That's the reason why the trend is down on Monday and up the rest of the week, because the low is scheduled on Monday. If the is formed before or after Monday, then we will adjust the trend. The 80 days cycle. The 193.18 high on December 27th have been confirmed as the 80 days cycle peak. The last 80 days cycle low occurred on December 11th. The present one is expected on February 17th, and will form at the same time the 20 weeks low. The average length for the 80 days cycle is 68 days. 68 days from the December 27th is February 17th. On January 22nd, the gold ETF crossed below his cycle line at 187.22, giving a potential target at 181.26, or $5.96 or 3%. The success rate for the 80 days cycle is 86%. We have to watch carefully if the gold ETF meet his target. If the target is not met, we can expect a very good rally when the 80 days cycle low is formed. When are we going to know when the 80 days cycle has formed? When the market will cross above his 20 days cycle line, this will be the first sign of the 80 days and 20 weeks low has formed. The 40 days cycle. The 40 days cycle average length is 34 days. Adding 34 days from the last 40 days cycle low on January 17th. Give February 20th as the next potential low. Since the last 40 days cycle peak on February 1st. The gold ETF crossed below his cycle line at 188.26, providing a potential downside target at 183.34, or $4.92 or 2.61%. The success rate for this cycle is 100%. Since we are only in February for the year 2024, the success rate is accumulation of the year 2023 until now. 2 months of this new year, there is not enough trading signals to be significant. The 20 days cycle. The average length of the last 20 days cycle is 15 days, so the next 20 days cycle low is expected to form on February 20th. The gold ETF crossed below his cycle line on February 9th, at $188.04 for a potential target, at $184.72, or a potential profit of $3.32, or 1.77%. With a low at $184.32 on Tuesday 13, the gold ETF met his target with a profit of $3.72 or almost 2% in 4 days only. The success rate is 100%. Here are the cycle lines resistance and their potential upside targets if the market cross above this week. What's next for the 20-day cycle? The 20-day cycle line is a very important line to keep an eye on. Next time the gold ETF cross above it, this will be the first signal of the potential 80 days and 20 weeks cycle bottomed. This crossing will provide an upside target, which should be met very quickly. Then, at the time of the next 20 days cycle formation, the market should correct and find support on his cycle line. If the gold ETF finds support on his cycle line, then rally and make a high higher than the target triggered by the previous crossing. This will be the confirmation of the 80 days and 20 weeks cycle low. In this case, the market will continue his bullish move, certainly on his way to the $200 monthly target. Here the roadmap for the next 80 days cycle. Let's assume the 80 days and 20 weeks cycle formed a low on February 20th. The March 8th, after meeting his upside target, the gold ETF should find support on his cycle line. Then rally, making a high higher than the previous one made during the previous rally. Then around the third week of March, the gold ETF should cross below his cycle line, providing a downside target, certainly very close to the 40-day cycle line, and made a low around March 25th. Then the gold ETF should rally again, crossing above his cycle line, providing an upside target. Around the first week of April, the market will cross again below his cycle line, providing a downside target for the 80-day cycle, with a first low on April 11th, then rally, using his cycle line as resistance, and resume his decline to form on April 28th. Of course, if the actual 80-day cycle low occurred before or after the February 20th, we have to adjust the dates. This is the bullish scenario. If on March 8th the market crossed below his cycle line sharply, this will mean some bearishness come into the market. In this case, we may have to switch to the bearish scenario. The 10-day cycle. The 10-day cycle success rate is 90%. The last signal with the cycle line was on February 5th, when the gold ETF crossed below his line at $188.10. For a target at $184.84, or $3.26, or 1.73% of profit. The last 10-day cycle low was on Wednesday, February 14th. And the next one is scheduled for February 21st, the yellow zone on the chart. On the nominal model, the average 10-day cycle length is 8.5 days. But since the December 11th, 2023, the cycle run little bit shorter, is now 7 days. Here the cycle line and their potential target if the gold ETF cross above his cycle line this week. In conclusion, February 20th and the target 181.76 are the both numbers to remember. But we have to keep in mind the possibility of the 20-week cycle may have already bottomed last week on Wednesday, February 14th. This is the end of this week's video.